Hello traders, hope you're well. Welcome to my video on the rubber band trading strategy, where I'm going to show you how you can use this simple strategy to capture moves such as this one for over 400 pips. Okay, so a quick word about the rubber band trading strategy is basically a mean reversion strategy that involves buying when the market is weak and selling when it is strong. So we're looking to buy at the low and sell at the high, okay? And the strategy is based on the idea that a market will snap back to equilibrium after becoming too stretched, similar to a rubber band, hence the name, the rubber band trading strategy. Okay, you can use different indicators for this. I'm using Bollinger Bands with the default settings, okay? A moving average, a 200 moving average, so just for the long-term trend, because I want to trade in the direction of the trend, and also an RSI to help identify these overbought and oversold markets. So basically, what we need to do is we need to look for a scenario where for a sell trade, we want the RSI to be up around here, okay? Because that's suggesting that the market is strong, okay? And we're going to look to sell basically as it starts to fall. We don't just sell as soon as the RSI is overbought. Okay, there's more to it, but that's the first indication we look for is the RSI to be overbought. Okay, but then we want the price to fall below the 200 moving average, this red line here. You can see that does happen there. However, we want to pull back after prices below the moving average. It needs to pull back to see this middle band here. Okay, so the Bollinger Bands, these green lines, we want the price to pull back to the middle line. Well, that's what my interpretation. This is what I use for confirmation, and it'll all start to make sense if you follow along in this video, okay? So we're still waiting, and then here, okay, is when you see the bands start to turn in a downwards direction. Okay, we've got our divergence on the RSI. Let's go ahead and in a downwards trajectory. So we're looking for the short trade. Price does fall and stay below the 200 moving average. Okay, and the Bollinger Bands start to expand as we have a breakout below the 200 moving average. Okay, so here, this area here, this is where the price started to pull back to the middle band, as I just mentioned. Okay, price pulls back to the middle band. Price is below the 200 moving average. We had the RSI was overbought, so the market was strong up here, but it's starting to fall. Okay, and this we can time our entry on a breakout trade here. Nicely in with these lower highs. You've got a wedge formation there. We zoom in. You can see various bearish candlestick price action. We've got a 3 inside down candlestick pattern. So that's a bullish candle followed by a bearish candle that's at least 50% of the bullish candle's body, followed by another bearish candle that breaks below the low of the initial bullish candle. So that's a very bearish signal there. In fact, you have another 3 inside down there as well. Bullish candle, bearish candle, bearish candle. Price has actually formed a level of resistance there and consolidation. This is a good breakout trade there into this trend. This is a 1 hour euro dollar chart. You can use this trading strategy on any trading instruments, so Forex, stocks, commodities, cryptos, indices, etc., and any chart time frame. Me personally, I prefer to trade the 1 hour charts and above. So the 1 hour, 4 hour, daily, weekly, monthly, that's just because they contain more price data and therefore I find signals tend to be more reliable. That applies to technical indicators and price action analysis. Okay, so we take this breakout trade here on the pullback to the middle band. Stop loss above the recent high, so that would be here. Really tight stop loss around 10 to 15 pips, which is fantastic for the 1 hour charts. I don't use a fixed take profit. I'm not going to just see price drop down here and get excited. Oh, we're 80 pips up after broker fees. Let's, take profit and close the position, because you just end up leaving too much on the table in some cases. Okay, I want to cut losing trades short with a tight stop loss and let winning trades run as much as possible. So I would instead move the stop loss to break even. And then I keep moving the stop loss. As prices drop in, I just move the stop loss above the recent highs all the way down, okay, just to try and maximize the move as much as possible. If we zoom out, can see we could have trailed this move all the way down, say to around here when the price started making these higher lows. We could have trailed it all the way to the bottom. You're looking at over 350 pips profit potential on that particular trade. I mean, we'd be very disappointed if we just exited prematurely up here somewhere. You can, of course, re-enter. The entry is exactly the same. So price below the 200, simple moving average for a sell trade. You wait for a pullback to the middle band. Okay. Then you just draw your level of support and trade the breakout. You can see a big breakout candle there. That level of support then becomes resistance and a nice continuation of the downtrend there. Got an M pattern formation there as well. Okay, you also have your resistance level there. You can see it was like a descending wedge pattern. I do have lots of videos on the various chart patterns you might want to check out. It's just good to be aware of them. So that's another opportunity to get in on this particular move here. Okay, even though this is the RSI is oversold here, and you might be thinking, well, shouldn't I be looking for a buy trade, you know, buying in a weak market? This is the thing about technical indicators. They are lagging and they're not the gospel, which is why if you do insist on using them, you want to combine them together. Don't just use one and take every single signal, you know, as the gospel. You need to do your own price action analysis. Obviously have good money management and trading discipline as well. Don't let negative emotions, fear, anger, and greed cloud your trading decisions. Don't overtrade, don't FOMO, don't revenge trade, don't force trades that aren't there. I think, so again, we had the pullback to the middle bands. Could have traded either on this breakout there, where this support then became resistance, or this one here, big breakout candle. That's actually NFP, non-farms payroll first Friday of the month candle. Nonetheless, we could have used that momentum to hop in on the downtrend there as well. Okay. And that's basically a short trade example on this rubber band trading strategy and my interpretation of it. I think it's important to emphasize that. There will be people who have different opinions. But really the RSI for me is just to trigger the initial entry point. And you can perhaps use it to avoid selling as well. Like if you've seen this big drop here and you got excited and price was down here and you thought to sell, you could look at the RSI being oversold down here already and just wait for the pullback, okay? And then look to trade on a breakout following the pullback. Same with this scenario here. You wouldn't sell with the RSI down here because you're just at the bottom of a big move. Just wait for a pullback, okay? And then look to trade on a breakout of that pullback. In that instance, that would be along this line somewhere. So a breakout, see a strong support and a breakout there. In fact, that support then becomes resistance, is so often the case. And you could have entered in on the trend on the continuation there. And obviously don't sell at the low. You wouldn't really want to sell after seeing a big move like that. But you can use the strategy the same. You know, pull back to the middle band. Some traders would actually sell on the upper band there. Okay. So you see how we're selling on the breakouts. Other traders would be maybe just sell before on a crossover the bands. The thing is that won't always happen. You can see that this trade it didn't happen, this trade it didn't happen, this initial trade the price didn't quite make it back above the bands. Okay, that is another way to do it. Otherwise you just draw your support levels and trade your breakout of your support. Obviously open to interpretation where support levels are, but with a bit of practice, you know, you just learn how to draw them and they sort of have a self-fulfilling prophecy after a while. M chart pattern there, breakout, support then becomes resistance, almost perfectly continuation of the downtrend. Okay, so the rubber band strategy, let's have a look in an uptrend. Okay, so we know what the signs were to look for. We were looking for the RSI this time to be oversold, so weak market. This is our weak market situation here. Price is below the 200, so we wait for it to cross above as it does with some force there. Okay, then we wait for this pullback. The problem with this situation is we've got this level of resistance to fight against. So, and then you can see we have a bit of a consolidation here. So use common sense as well. When you see a consolidation like this for this long, you're just going to want to wait for the trend to really start forming. Even here, the trend does form, but then we have a big drop back down, okay? And you're not, as I said, you don't want to buy when the RSI is in an extremely overbought situation already. Instead, you want to wait for a pullback, okay? And now we can start thinking about entering on the breakout. This time we're going to enter on a breakout resistance because we're in an uptrend, okay? So you got a W chart formation there as well, breakout to the upside, okay? Even here, some traders may have been looking at this resistance and this wedge formation in here, okay? Consolidation and a breakout. This resistance then becomes support, continuation to the upside. RSI's got the bullish divergence as well for extra confirmation. Price is above the 200 SMA, and we're rocking and rolling in this uptrend. Okay, you can always, as I said, wait for a trend to form. If you don't want to take the aggressive initial entry, wait for a pullback to close to the middle band, and then just draw your resistance. And no coincidence, a big breakout candle there to the upside. Same here, pull back to the middle band, draw your resistance, big breakout candle. Okay, pull back to the middle line, draw your resistance, big breakout candle, like clockwork, there's no coincidence. Okay, this is obviously a deeper pullback. You can draw your support, sorry, your resistance line in there like that, or you can just do it like that, big breakout. Either way, you can catch that breakout there, W chart formation as well. Okay, had we taken this initial breakout trade down here, you're looking at over 200 pips per profit potential, stop loss just below the low, only 10 pips, which again is really tight for the 1 hour chart time frame. Just emphasize the importance of having good money management, because you can have the perfect entry, you know, the best combination of indicators and price action analysis, but if you just enter in here and, you know, exit here, okay, 30 pips, not a bad trade with a 10 pip stop loss, but you just left all of that on the table, okay? And some may argue, well, you can re-enter, but I'll argue the more you re-enter, the higher your chance is of being wrong or buying at the high and selling at the low. Okay, and indicators aren't gospel. They won't always, as I said, get it right. There will be instances, like for me, this is a good breakout trade, but if you look at the RSI, it's saying that it's overbought. So would you have avoided that particular trade based on the RSI? You would have missed out. Okay. But that being said, to be fair on the RSI, the initial trade down and around here was best anyway. And we had another pullback here. Can you see that pullback there? This resistance level then became support, so that was actually a good entry. You've got your bullish hanging man candlestick formation here if you wanted to wait for the breakout just to ensure it wasn't a fake out. So wait for the breakout and then confirm it when you see that this resistance holds up as support and price starts to move back upwards. Okay, and make these higher lows. Got your wedge pattern formation again and a breakout to the upside. No coincidence there's big candles like this on breakouts. Yeah, so just take your time, demo trade, practice. You don't even need indicators. As funny as that may sound to some, I mean, sometimes they can do more harm than good. Like if I just remove the bands there, okay, in fact, I'll even remove the moving average, okay, and I'm going to delete the RSI, okay? Now, some traders may look lost, but let's break it down as simple as possible. Higher lows, okay, so what does that mean? Uptrend, yeah, support and resistance. So trend direction, okay, let me just clear some of these lines, just don't want to clutter, just want to, okay, so we first established the trend. It's an uptrend, right? We obviously don't want to buy at the top. So what's our other option? We want to buy as low as possible, but then we won't always be able to buy at the low, because if we keep trying to buy at the low, we might be buying against a strong downtrend, okay? So what can we do? We can wait for the trend to start forming as it did up here, okay? And then wait for a pullback and just trade our breakouts. I mean, uptrend, breakout of resistance here. Okay, if you don't want to trade the breakout straight away, you can wait for price to come back and test the resistance to see if it becomes support as it does here, and then trade the pullback breakout there. No coincidence, big breakout candle. Okay, even here. Okay, And we don't need no indicators to do that. But we do need good money management, because in this instance, if you took this trade and you saw price go almost 50 pips and you didn't do anything, you may have had your stop loss, which would have been probably around here, 10 to 15 pips would have been taken out here. So what do we do when price goes up here? We move the stop loss to break even, okay? And then we look to trail it if price continues. If price takes us out for break even, so be it. We get another opportunity, as you can see. If we want to just trade this resistance level, is probably the more obvious one. Okay, you can see this resistance breakout becomes support and continuation. Okay, again, if you didn't want to trade the initial one, you can wait for a pullback and trade the second one. Big breakout candle there. Some traders would have even been in before. Okay, maybe down around here somewhere. Same principle, you've got your resistance. This is a 1 hour chart, so plenty of price data. If you went into like a 5-minute or 50-minute chart, you'd see probably a lot more this resistance on a lot more candles. We definitely would. But then this resistance becomes support. Okay, bullish hanging man pattern. Okay, 3 inside up candlestick pattern. So some traders may have done that. They may have traded the first breakout or waited for the pullback and traded the next one, just seeing if the resistance became support. Okay, you don't need no indicators for that. Okay, again, trending upwards, pullback here, breakout, resistance becomes support, there and there. Okay, continuation, breakout. Yeah, so we don't need no indicators. We just need good money management. You know, I like to cut losing trades short, let winning trades run, have good trading discipline, have a plan and stick to it. With ample, like there's so many trading instruments you can choose from, and chart timeframes. Don't need to force trades that aren't there. There'll always be trends going on somewhere we can just look to jump in on. You know, even here I can see lower highs. Okay, break out of this support level. Okay, pullback and a breakout trade there. Okay, you missed that breakout trade, pullback, and you've got another breakout trade there. Okay, and then the one that we were doing earlier, you don't need no indicators to do this. You just see the market has reached resistance, market is in a downtrend, and we can just trade a breakout of support in line with the trend, have good money management, and catch some big moves. Okay, everyone's different. This is what works for me. Hopefully you found something useful in the video. If you can like and subscribe, that'd be great and really help my channel. Thanks for watching, and I wish you all the best with your trading. Take care.